Hi everyone, good morning and a very warm welcome to our webinar today, which is year-end part 1, all about finishing your 2025 payroll. My name's Sarah and I'm joined by my colleagues Duncan and Alan, who will be ready and waiting to answer your questions. So this is what we've got lined up. First, I'll be kicking things off with an overview of the payroll year-end process. So I'll do a bit of a recap about how submissions are now made in real time to revenue and what tasks still need to be done when the tax year wraps up. I'll then move on to some practical steps. So I'll be showing you how to install your update, and I'll share a few handy tips to make sure that goes smoothly as well. After that, Duncan will dive into finishing your 2025 payroll. He'll cover a few things here. So things like extra pay periods or week 53, holiday periods, small benefit exemption, and a bit of housekeeping as well. He'll then be walking you through the year-end process itself and showing you how to produce the employment details summary report. And then I will be back to finish off with an introduction to auto-enrolment in the 2026 tax year. So we'll look at things like auto-enrolment criteria, scheme details, and how best to prepare for the changes. And as you know, this is only part 1. We do have a part 2 webinar coming up. So in part 2, we'll look at setting up the new tax year, creating your payroll calendar, clearing balances, and what's new for 2026, including a bit more about auto-enrolment. But you can sign up for part 2 if you haven't already using the link in the chat, or the follow-up email we'll send a little bit later after today's session. So let's get things started with our year-end overview. So to give you some context, I just want to quickly recap how payroll information is reported to revenue in real time throughout the tax year. So on every pay date, as an employer, you'll start by retrieving the latest revenue payroll notifications, or RPNs, from Revenue's online service. This ensures your employees are always on the most up-to-date tax credits and cut-off points. You'll then enter the payment details on your timesheets as usual, run end of period, and then produce the payslip and pay your employees. Now, you'll also submit a payroll submission to revenue, and this is going to include details of all taxable payments and deductions which make up your monthly liability. It might be that you also need to submit an enhanced report and submission as well, to include any details for any benefits or expense payments that fall under AIR. And that does include the small benefit exemption, but Duncan will be covering that in a bit more detail a little bit later on in the webinar. Now, because you're submitting information on each pay date, by the end of the month, Revenue already have enough data to produce your statement of account. Now, this statement is usually available by the 5th day of the following month, and it gives you a breakdown of your liabilities. So it'll cover tax, PRSI, USC, and LPT. Employees can also log into the My Account section on the Revenue website, and they can see the pay and tax details that you've submitted over on their behalf. Now, to make sure everything in your payroll matches what Revenue have, we do recommend running the employer monthly liability report at the end of each month. You can then compare and reconcile it with your revenue statement of account. And if you do this regularly throughout the year, that's really going to help you keep everything accurate and up to date and spot any errors as they come about as well. So it does help you keep on top of things. Now, it might be that you want to repeat that process at the end of the year as a bit of a final check. But because you've been doing this each month, when you reach the last day of the year, so December 31st, there's actually no extra reporting you need to send over to Revenue. So all the official year-end documents are handled by Revenue and made available to employees through the My Account section on their website. So employees will receive an employment details summary for all of their jobs during the year, along with an end of year statement that they'll then be able to access from January. Now, as an employer, you can still choose to produce an employment details summary report for your employees, or it might be that you just want to keep it for your own payroll records. Now, this is totally optional, but Duncan will be showing you how to generate that report a little bit later on in the webinar. So as you can see, there's really not much left to do in terms of reporting to revenue at year end, but the main goal of today's session is just to make sure you close out 2025 correctly and set yourself up for a nice smooth transition into 2026. And remember, we will cover some of those steps in our part 2 as well. I'm going to move on now to talk about actually installing your payroll year-end update. So a lot of you might have already done this. This was released on the 24th of November, and it is available both as an automatic update within your software and as a download from the Help Centre as well. Now, it is really important to install your year-end update as soon as possible and before you start processing any year-end tasks. Now, you'll need the update to generate your year-end reports and to set up the 2026 tax year as well. So just to run through a bit of an overview of how you would install it first. So you would be logging into any of your payrolls, going to the help menu just up at the top, and then clicking check for updates. You should then see a pop-up like the one on the slide, confirming that the update for year-end 2025 is available. And from there, you would just download it and install it. Now, if automatic updates aren't working for you, or you might just prefer to download it manually, you can also find it in our Help Centre as well. So I have put a link on the slide there that will take you to the guidance to download the update from the Help Centre if you need to. So I want to walk through the installation screens together. So during the installation, you'll be asked to choose the installation type, and you can see there are 2 options. So first option is a this computer installation. And what that's going to do a full installation of both the program and the data update together. So that's going to be the right choice for you if you only access your payroll from one PC, because it's going to update everything in one go. Now, the second option you can see on there is the client server installation. Now, that one's designed for multi-user setups. So if you access your Sage 50 payroll from more than one PC across a network, this is going to be the option that you want to go for. Now, on that note, here is a bit of an important tip when it comes to the client server install. You do want to always update the server first. Now, when you download the update file, run the installer on the server. That updates the location where your shared payroll data is stored. So once the server is updated, you can then go and update each client PC. Now, if you try to open payroll on a client that hasn't been updated yet, you'll just get a prompt to install the update right there and then. The installer will then run from the server location, so you don't actually need to download the update separately on each PC. Just make sure that the server is done first, and then each client PC will follow after that. So definitely a top tip there if you have that set up. Now, once the installation is complete, you'll notice a new desktop shortcut for Sage 50 Payroll 2026. You'll notice there is a slight name change, but absolutely nothing to be worried about. It is still exactly the same product. Now, this update will install 2 things. So first, it's going to update your current tax year to version 28.2, which is going to add the year-end functionality that you'll need. Secondly, it installs version 29, ready for the new tax year. Pretty easy to check which version you're on. Easiest way is just by looking at the top of the screen in the software, but let's get jumped into a quick demo of this, put that into practice. Just going to bring the slides down, and I want to start things off just by checking if my update has installed correctly. So easiest way to do this is I'm going to look at my version number just at the top of the screen. Mine shows 28.2, and that confirms to me that the update is installed. Another thing I can look out for is just this here, so you can see it says PYE 2025 ready. So that's another thing that's confirming to me that my update has installed correctly. Now, some of you might be following along with this today, so if you're not on the recent version, here's what you want to do. So if you go to the help menu just up at the top, And then you want to go down and check for updates. The automatic update service will find the payroll year-end update for 2025. And from there, you can download and install it. Now, since I'm already up to date, you can see there's no new updates for myself. But I do want to show you something useful, and that is how to check where your program and data are installed. So you do want to still be logged into Payroll. You want to go back to Help. But this time, you're going to go down to System Information. Now, once the support homepage loads, you want to look at the left-hand side in this section here. And the first thing I'm going to look at is the program directory. Now, you do want to make a note of this so you can just confirm that the update installs in the right location. So in my example, the program directory is on the C drive under Program Files in the Sage Payroll IRL folder. And that's a folder that's going to be being updated. Now, my data directory is also on the C drive, and that's because I only use Payroll on one PC. So when I did my update, I chose this computer installation, which updates both my program and my data together. Now, one more thing you'll notice is you can see I've got a new shortcut for Sage 50 Payroll 2026. Now, again, slight name change there. It is exactly the same program, and you can see that we've got a slightly different icon as well. But like I mentioned, it's absolutely nothing to worry about. It is just a slightly different name. Now, if you do try to open this before you've completed your year end for 2025, you'll get your login screen where you can enter your username and password, but there won't be any payrolls to access yet. But don't worry about that. That is completely normal. It is because I haven't finished my year end or I've not set up the new tax year yet. And we'll show you how to do that in part 2 of the webinar series. So nothing to be concerned about. Main thing that you're going to be looking out for is that the icon is there and installed. So that is my update all installed. Just want to do a quick recap and share some top tips for a smooth installation as well. So just to recap the update process itself, so you'll either run the update through the automatic update service or download it manually from our help centre. What that's going to do, that's going to upgrade your 2025 version to 28.2 and at the same time install version 29 ready for the 2026 tax year. And remember, if you're working across a network, update the server first and then each client PC after that. Now, here are a few top tips to make sure the installation goes smoothly. First is timing does matter, so you do want to try to install it at the start or end of period. That just helps minimise any risk of any data issues during the upgrade. You want to take a backup, so you want to make sure you have an up-to-date backup of your payroll data. Then in the unlikely event if anything does go wrong, you have something there to restore. So always good to have a bit of a safety net. You want to check your directories. So we looked at that in the demo. Remember, you can find your program and data locations under help and system information. So we know exactly which folders are being updated when we do the install. You want to log in as an administrator. Now, just to clarify, this is the PC administrator, not the payroll admin. So you do need the right permissions to install updates. But if you're not sure if you have those IT permissions, then your IT team should be able to help you with that. So maybe double check with them if you're not 100% sure. And last but not least, you do want to watch out for any antivirus software. So sometimes antivirus might try and block files during installation. And if you do see any pop-ups or run into any issues at all, might be worth temporarily disabling the antivirus and trying to rerun the install. In most cases, that's going to fix the problem for you. So that is your first step, getting the update installed. I'll now pass you on to Duncan, who will look at finishing your 2025 payroll.
Thank you very much, Sarah. So you've seen there how to install the update. I know that many of you will have done that already, but if you haven't, there's no need to wait. You can get that installed just as soon as you're ready. And what we're going to focus on now is finishing your 2025 payroll, which is exactly what it says on the tin. It's essentially, it's running all of your payroll for pay dates that fall in 2025. So we are going to focus specifically on extra pay periods, holiday periods, processing small benefit exemption, and then we'll run through a little bit of housekeeping just to make sure everything's good to go before you move into 2026. So let's just start with a bit of an explanation on extra pay periods. Now, this is something that might affect you if you run a weekly, fortnightly, or 4-weekly payroll. If you pay monthly, bi-monthly, or quarterly, you never have an extra pay period, and that's because there are always 12 months in a year. But when it does come to these weekly-based pay frequencies, because the number of days in a year doesn't divide into an exact number of weeks, there are some years where you end up with an extra pay period. So in 2025, there are 365 days. If we divide that by 7, we have 52 full weeks and that 1 extra day. And if your usual pay date happens to land on that extra day, that's when you have the extra pay period. So for this year, you'll have an extra pay period if your usual pay date falls on Wednesday, the 31st of December. Now note this is in relation to the usual pay date. If, for example, you normally pay on a Thursday and you were due to pay your staff on Thursday, the 1st of January, 2026, but with that being a public holiday, you're paying them slightly earlier, you don't have an extra pay period. You'd still treat that as being paid on the usual pay date. And there's actually a really simple way to check if you have an extra pay period, and that would be to review your payroll calendar. So I just want to show you that now. So if I just bring these slides down. So this is actually a tax calendar, which we do have available on our help center. And just to sort of reiterate how the extra pay period comes about, obviously the tax year in 2025 began on Wednesday, the 1st of January. And then by the time we get to the end of the year, if I scroll all the way down, you can see we've had 52 full weeks, and then we have the 31st of December, and that's the pay date that results in the extra pay period. So if you're not sure if you've got one, the easiest way to check is to have a look at your 2025 payroll calendar. So here I am in my 2025 payroll. And if I go to company/payroll at the top of the screen, and then come down and click calendar, you'll see within this calendar, I have the period numbers. I then have columns for pay date and bank date. And it is the pay date that determines the tax period. And in my example, my employees are paid every Friday. So you can see at the start of year, period 1 was Friday, the 3rd of January. And if I scroll all the way to the bottom, that will then confirm my last period of the year. So in this example, it's going to be period 52, and the pay date is Friday, the 26th of December. So that confirms to me that I do not have an extra pay period. I don't have a period 53 in my calendar. And it's really important that you don't manipulate your calendar to try and force a week 53 or to avoid a week 53 if you're supposed to have one. It's only if your usual pay date would have fallen on the 31st of December. So I know that I haven't got one, but let me show you an example of a calendar that does have an extra pay period. So on the screenshot here, you can see I've highlighted a period 53, where the pay date is Wednesday, 31st of December. And if you pay fortnightly, if you have an extra period, it would be period number 27. And if you paid 4 weekly, it would be number 14. And if you have got one, there's nothing that you need to do differently when you come to process it. You would simply set the period in the usual way, but you will then see a pop-up message that tells you that to comply with government legislation, your tax and USC is going to calculate on a week 1 basis. So all of that is handled for you. You don't need to change the tax status or anything in the employee details. And you'd also notice on the pay slips that the tax and USC status will show the W. So it's always worth checking if you've got one. And remember, it is based on the date your employees are paid, and it's your usual pay date. So as a one-off, if you're paying a day early, like the example I gave you earlier, you wouldn't have an extra pay period. But if you were going to have a pay date on the 31st, that is when you get one. So you can read more about how this all works following the link there on the handout. So from extra pay periods, and I want to quickly mention holiday periods. So this is something that you might consider using, particularly if you run a weekly payroll and you're wanting to pay your employees for more than 1 week at the same time. So obviously the end of the tax year is the Christmas period, and many businesses will be closed. You may well be taking annual leave during that time. So you'd probably be wanting to process your payroll early. And in some cases, you might actually pay your employees for some of their weeks before they would usually be paid. Now, when it comes to handling this in payroll, you do have two options. So option one, which is arguably the simplest option, is to process each individual period separately. So even if you're doing this early, you would set the period, you would enter the timesheets for the first week, you'd run end of period and produce all of your reports and do a submission. And then once you've done that submission, you could then move on, set the next period and run through the same process. And that way you're going to end up with multiple sets of reports that you've created, and you could simply add together the net pay that is due for those periods, and you could pay that to your employees as a lump sum on the earlier pay date, or you might simply schedule the payments to be made on the usual pay dates. So send your bank files and get them scheduled for when they would usually be paid. Now, the other way to handle it is to process a holiday period. Now, what this does in payroll is it will use the additional allowances for tax credits and cut-offs, and it will automatically multiply standard amounts for any payments you've set up to include in holiday pay. Now, when you set a holiday period, the main advantage is that you'll end up with a single set of reports covering the full payment that was due for those individual periods. And if you create bank files in payroll, it just means that your bank file will also contain the total net pay amount. A couple of important caveats: holiday periods must not be used for the extra pay period, so pay date Wednesday 31st of December, as that requires a week one calculation. And it should not be used for any pay dates that would have fallen in the new tax year. So if it's a payment for a 2026 pay date, that must be processed in your 2026 software. So we have linked to some guidance on doing this, but just a high-level overview on how to set a holiday period. There's two ways you could do it. If you want the holiday period to apply to all employees on your payroll, when you set the period initially for the date you're going to pay the employees, you can increase the number of insurance weeks to the total number of weeks that payment will cover, and that will automatically apply a holiday period for everyone on payroll. So in the example you can see on the slide, we're setting period 51, but because we've increased the insurance weeks to 2, it means that we're going to cover the wages for week 51 and week 52. The other way you can do it is you can enter a holiday period on an individual timesheet. So when you're in enter time and pay, you can set the number of holiday periods. So it's the same example on the right-hand side. We're processing week 51, but for that employee, we're entering 1 holiday period. And you can see that that's going to use 2 tax credits. It's going to multiply the salary in this example by 2. So the employee ends up with the total amount of pay, but the deductions are calculated across that full period. So remember, you don't have to do it this way. You could still do individual pay periods and then add together the net pay or schedule the payments for when they needed to be paid. And like I say, you can access more information on this following the link on your handout. Now, the other thing I want to mention when we're talking about finishing payroll in 2025 is small benefit exemption. So you may be aware that since 1st of January 2024, any small benefits provided to employees must be reported to revenue in real time under the Enhanced Reporting Requirements, or ERR. Now, a small benefit is a non-cash payment. So it could be something like a gift card or a small gift. And under this scheme, you are allowed to provide up to 5 small benefits per tax year, so long as the total value does not exceed €1,500. Now, because it's common to give out gift cards, for example, around this time of year, you might want to process the small benefit through payroll. We're going to show you how to do that, as that will then allow you to send an ERR submission directly from your payroll software. The alternative is to submit the small benefit items via the ROS portal, so you can do ERR submissions manually that way. Now, if you decide you're going to process it through payroll, you are going to need to do this using both a payment and a deduction. So with a small benefit being a non-cash item, you need to record the value of it using an expenses payment, and then you can categorize that expense as a small benefit, so it appears on the ERR submission under that category. But you would also need to process the same amount as a net deduction, so that that doesn't end up in the employee's net pay. So in the example on screen, I've got a €500 expenses payment and a €500 deduction. So the employee's net pay is what they would usually receive. Now, if you process it this way, it means once you're at end of period, you will then be able to send an enhanced reporting submission from payroll. So you wouldn't have to log in to the ROS portal separately and enter the details manually. So we're going to give you a demo of this. I'm actually going to process my final period of the year, and I'll show you how to include small benefits if that's what you need to do. So I've already set my period, pay date 26th of December. This is also the period in which I'm providing gift cards to some of my employees. So in order to process these, if I just show you my payments, I'll go to company payroll at the top of the screen and select the payments option. You'll see that I've already got an expenses payment set up, and I've given it the title small benefit exemption. And if I just show you the settings, if I click onto edit, you can see the type of payment has been set to expenses, and the enhanced reporting category is small benefit. So if you haven't got one of these, you can easily set one up using the new option. Once you've entered your title, this is where you choose the type. And when it's expenses, you can choose the category. So that's what I'm going to use to process the value of the small benefit. But what I've also set up, if I go to company payroll and then deductions, is a net deduction. So the type is net, after tax, PRSI and USC, and a standard subtype. So that's then going to be used to deduct the same amount so that it doesn't get included in the net pay. So by doing it this way, it means we can record it in payroll and we can submit it using the enhanced reporting submission. So I'm going to go into enter time and pay. Let's assume I've already checked for the latest RPNs. I'll start with the batch entry mode. And you can see the standard amounts for basic hours and salary, etc., are already entered. And I have already switched on the columns for my payment and deduction. But if you can't see these in batch time and pay, just at the bottom of the screen, you can click select pay deductions, and you can tick the relevant payments and deductions from here. So just looking at my first employee, we're going to give them a €500 gift card. So I'm going to first record that as an expenses payment. Which I've just done in that column there. And you can see that has increased the employee's net pay by €500. I'm then going to take away the same amount because they've received a gift card. It's not in their net wages. And once I've entered the deduction, you can see that their net pay has returned to normal. Now, if you're entering this on the individual timesheet, it's going to look something like this. So I've got the small benefit amount here. I've got the same amount as a deduction. And then you'll see on the payslip as well. So they can see it's been recorded in payroll. It's also been deducted. But crucially, it means we can submit this directly to revenue. So I've actually got 4 employees that are receiving gift cards. So I'm going to pop the values in against their names. Got payments and deductions. I don't need to make any other changes this period, so I'm going to save the valid records. And then I would complete my payroll as normal. So I can check the control summary, gross to net reports. I can run end of period. And then I would send my payroll submission in the usual way. So this reports the taxable items and the tax, PRSI, USC, and LPT. So here's a summary of what's sent in the payroll submission. So that has now been received by revenue, and I can now move on and send the enhanced reporting submission. So this icon here on the process map. And when we go in to do this, because we've processed an expenses payment, you can see it's automatically been categorized in the small benefit column because of the way we set up the payment. So nothing I need to categorize manually. I can click onto next and review the details of my submission. So 2,000 euros of small benefit for 4 employees. And I can go ahead and submit that. So that one has also been received, which means that I've been able to process and report the enhanced reporting submission directly in my payroll. So I'm now at end of period. I can produce my pay slips in the usual way, any bank files, etc. And then I'm ready to start thinking about completing the year-end process. So if you are a bit new to ERR, there is more information on our help center. So I've linked to the ERR hub, which you can access if you download the handout. So before we move on to the year-end reports, I'm just going to cover a little bit of housekeeping that you can do once you reach the end of the tax year. So as Sarah mentioned in the introduction, at the end of each month, revenue produce a statement of account based on your submissions to them in the previous month. And we do strongly recommend you compare that with the employer monthly liability report, just so that you can be sure and confident that your payroll records match up with what's been submitted. Now, if you've been doing that throughout the year, that's great. You might want to repeat it as well at the end of the year, just so you can be doubly sure. Now, it is possible to retrieve the statement of account directly in payroll. I'm going to show you that in the demo. And we created a report that shows the exact same information based on what's stored in your payroll records. So you can reconcile these reports, making sure that everything matches up. So let's have a look at how to run the reports first. So we will start with the revenue statement, and you can access this by going to the direct payroll reporting menu option at the top of the screen. And then here towards the bottom, you'll see revenue statement of account. So this is now going to connect to ROS. So we've got our ROS certificate already saved. I'm going to click onto next, and it's going to retrieve the totals for all of the completed statements. So at this point in the year, I'm getting everything up to November. And you can see it's laid it out with a row for each month and then columns for income tax, PRSI, USC, and LPT. Now, ignore the numbers that you're seeing in this demo. This is just for illustration purposes. But the idea is you would check off your total liability each month as compared to the employer monthly liability report. And just to note, this will pull through the totals for all submissions under that same ROS certificate. So if you've got multiple payrolls, maybe a monthly and a weekly payroll for the same company, this is going to show you the total of those submissions. If you want to print or save that report, just click on the Export Details option, and that will bring the report up on screen. Then you've got your print and your save buttons here at the top. Now you can compare that with the employer monthly liability. So go to the Other Reports option. And from Payroll Reports, select the Company tab. I'm then going to choose Employer Monthly Liability. And if I preview this report, it is then going to ask me which payrolls I want to include in it. So if I did have maybe a monthly payroll as well as a weekly payroll, I would need to include that as well if I submit that with the same ROS certificate, and that way I can compare like for like. But in this simple example, I just have a weekly payroll, so I'm going to click Continue, and we have options to show subtotals and breakdowns if we want to. But when I click OK, you should see that this report is in the same format as the revenue statement, and that then gives you something that you can compare month by month just to make sure that everything matches up. Now, if you notice that something doesn't match up, there are some tips on the second page of the report. So a lot of the time, this would be down to corrections that you've made. So for example, if you do a manual correction on the ROS portal, but you don't correct your payroll records in the same way, that would explain a difference. Or if you do a correction in payroll, but then you don't resubmit that period to revenue, that would also explain the difference. Or you might have missed a submission in payroll. So if this report is showing a higher total for 1 month than the revenue statement, it would then be worth reviewing your submission log. You get that from the direct reporting menu, just to make sure that all of the submissions have been sent. If you find that all of the totals are different for every month, it could be that you're not comparing the correct payrolls. So to compare like for like, you need to include all payrolls that are submitted under the same ROS cert. So that's how to find the reports, and all being well, the totals on both of those reports should then match up. Now, if you want to know more about how these reports work, if you click on the links in the handout, that will take you to our support guides. And there's just an example of how you would work through each month, ticking off the total liabilities. Last thing that's worth doing at the end of the year is a quick validate payroll data. Now, many of you will be running this at the start of each period, and you might not even know that you're doing that because there is now a setting to automatically validate data at start of period, but only show results if issues are found. What this tool does is it does a scan on the data stored in your payroll, and it alerts you to any potential issues relating to the company, the employees, or the GDPR. So I want to quickly show you how to run this manually and how to switch it on so it automatically runs at start of period. And ideally, you're looking for results where it says no issues found, as you can see there on the screenshot. So a quick look at this in the demo. A couple of places you could run this. On the pay run tasks, you can validate payroll data from here. Or if you go to the reports menu, you can come down to validate payroll data and you can run it from here. And if I do this now, it's going to scan my employees. The good news here is that no issues are found. But if there were any issues, I'd be able to click on the link. The detail would appear here. You could save that as a PDF if you wanted to, and we would link you off to help articles explaining how to resolve the problem. Now, the main reason I haven't got issues is because I've been checking this at start of period. And if you see at the bottom here, you've got your validate payroll data settings, which you can click on. And I'd recommend you set it up this way. So you're automatically validating at start of period, but then only showing results when issues are found. And that way you should be alerted at the earliest possible time if there is anything that might need your attention. But good news for me, no issues found. and that means I'm pretty much ready to complete the year-end process. So again, if you were here at the start of the webinar, we did explain that all of your reporting is done in real time these days. So once you've sent that final payroll submission for your last pay date, there's nothing further you need to send to revenue. And actually all the official documentation, so the employment detail summaries and end of year statements, are dealt with by revenue, and they provide those documents in the My Account section of their website. But what you can do if you want to is to produce a payroll report, so the employment detail summary report, which you could either give to your employees for their own reference, or you might keep a copy for your payroll records. Now, this would contain the same information as what they would see on the official version, so effectively giving them a way of sort of checking that what you're telling them is the same as what revenue is. So this can be printed, and you can give a hard copy to your employees, or if you're doing it for your own records, you might want to export a PDF, and then that would save the full report as an electronic version. So I want to show you where to access this in case you want to do this. So let's just jump back to the demo. First of all, before you create this report, do check that you're at end of period for your last period of the year. So you can check this on the status bar at the bottom. So I'm at end of period for week 52. And then to produce the report, you go to the year-end menu and then tax, and then you would click tax year-end reports. So just the one report here, employment detail summary, which I'm going to select. You can choose to include leavers if you'd like to produce a report for them. I'm going to go ahead and preview the report. And as you can see, it informs the employee that the document is for reference purposes only. It shows some company details and employee details, but then we have the totals for the year of the payments and the deductions that have been made. So this is including all of my current active employees. And if I wanted to print a copy, I can do so from the preview, or if I wanted to export it for my own records, I can click export, choose a suitable location, and then I've got a PDF that I can easily access. Now, this report is not designed to be emailed to employees. So if you were going to use the email option up here, it's going to attach the full report, so everything you see here, to one email. So obviously you wouldn't do that to send it to your employees. But if you do, for any reason, need to produce an individual employment detail summary, a quick tip is that you can use the sort and filter section. So if I filter by employee code, for example, and I just wanted this report for my first employee who has code 0001, I could enter that in the from and to boxes. And when I produce the report this time, I just get this employee's employment detail summary. So that can be exported, printed, or potentially emailed. So that's how you run it. That's where you can find that. You'd only get access to this once you've installed the year-end update. You need to be on version 28.2. But I'm now pretty much ready and good to go to move into 2026. So just before I hand back to Sarah, a quick recap of the steps that I've taken you through. So we started by checking if we have an extra pay period. So that's just weekly, fortnightly, or 4 weekly payrolls if your usual pay date lands on Wednesday, 31st of December. We've completed payroll for all pay dates in 2025, and we included small benefit exemption items in one of those payrolls so we could report it under ERR. We've reconciled our reports, we've validated payroll data, and we've produced that employment detail summary report. And you can read more detail on all of these steps, again, following the link in the handout. But that's it from me. It's now time to hand back to Sarah, who's going to give you an overview on automatic enrolment. So it's over to you, Sarah.
Thanks so much for that, Duncan. So what I want to talk about next is something that will be brand new for the 2026 tax year, and that is an introduction to auto-enrolment. So auto-enrolment is Ireland's new retirement savings scheme, and it's there just to help employees build a pension pot through shared contributions. So this is going to come into place on the 1st of January 2026, and it'll run under the name My Future Fund. So employees will contribute a set percentage of their gross salary. Employers will match that contribution, and then the state will add a top up. So the goal of this is just to make saving for retirement easier and more accessible, whilst it also simplifies the process for you as a business to offer a workplace pension. So the scheme will operate under the branding My Future Fund, and it'll be managed by NERSA, and that just stands for the National Automatic Enrolment Retirement Savings Authority. So what they'll do, they'll oversee enrolment, contributions, investment and communication. And just like any existing pension schemes, NERSA will be supervised by the Pensions Authority when everything launches in January. So let's talk about auto-enrolment and who actually qualifies. So to be auto-enrolled into My Future Fund, employees must be aged between 23 and 60. They have to earn over €20,000 annually and not already be in a pension scheme. Now, if they're outside of the age bracket or the earnings bracket, then they can still choose to opt in voluntarily if they want to, and they can do that through their employee online portal. Now, something I do want to note is if an employee has multiple jobs, it is their combined earnings that can actually make them eligible. So even if their earnings with you are below the €20,000, they can still be enrolled by any employer when they're not already in a pension scheme. So eligibility is based on earnings, so it doesn't factor in contract type or length, or if someone's a seasonal worker or part-time. So everyone will be considered, and it will be based on total earnings across all employments. So definitely something to bear in mind if you've got any employees with multiple jobs. So a little bit on how contributions will work. So contribution rates are fixed, and there's no changes allowed at all to these contribution amounts in these early years. So employees and employers will each pay the same amount. And then instead of tax relief, the state adds a top up. So that just makes the scheme a little bit simpler and a bit easier for you to implement. So to ease the cost, contributions will gradually increase over the first 10 years of the scheme. So you can see on the slide there, they'll start at 1.5% for both employee and employer. And then they'll increase by 1.5% every 3 years. Now, by year 10, both employee and employer will pay 6%, and the state will be adding a 2% top up. So you can see over time, contributions go from 3.5% to 14% over those 10 years. Now, something to bear in mind is if someone joins in year 8, they'll start at the 4.5% rate. So it will be based on the scheme's timeline, not their career timeline. So they would go straight in at that 4.5%. Something else to bear in mind is contributions are based on gross pay, so that'll include bonuses, overtime, but they will be deducted from net pay, so that's after tax. There is a cap as well, so if you do have any higher earners on the payroll, it is only earnings up to €80,000 that count. So if anyone earns more than that, then contributions will stop, and then they'll reset each year as well. So next thing I want to talk about is how NERSA actually assess an employee's earnings. So NERSA will use revenue payroll data to identify eligible employees. So they'll look back at 13 weeks to check the earnings. And if that look back period shows that the employee would earn over €20,000 annually, then they'll be auto-enrolled into the scheme, and they'll stay enrolled even if their earnings later drop. Now, the look-back period is just there because it ensures fair assessment and it prevents any short-term changes in pay from affecting someone's eligibility. And I did touch on this earlier, but one more point on this. So the look back does cover all employments, remember, not just yours. So any previous earnings as well with another employer will still count towards that threshold. Now, if an employee is auto-enrolled into My Future Fund, they are going to have some choices when it comes to auto-enrolment. Now, first, employees can opt out of the scheme, but this is only in months 7 and 8 after enrolment. So they do have to be in the scheme for a minimum of 6 months. If they do choose to opt out, it is their own contributions that will be refunded back to them. The employer contributions and the state contributions will remain invested into the pension pot. Now, second option employees have is they can choose to suspend their contributions for either 1 or 2 years. Now, during that suspension period, all contributions, so that's employee, employer and state, all contributions will stop. Now, with this option, there are no refunds and contributions can only restart after at least 1 year. So once they choose that option, that's the earliest they could then restart the contributions. Now, finally, if an employee does choose to opt out, they will be automatically re-enrolled after 2 years. But that is, of course, as long as they still meet the eligibility criteria. That just helps people from forgetting to actually rejoin the scheme. But if they still do want to opt out, they can, of course, opt out again through their online portal, and then you'll just receive an updated AEPN notice to then stop the contributions again. So they will go back in, but they can always opt out another time if they don't want to be in it still. So they've got a few options there, and that just gives employees a little bit flexibility when it comes to automatic enrolment. Now, I have mentioned the online portal a couple of times. So NERSA have launched a secure portal for My Future Fund, and that was launched on the 1st of December. Now, the portal is accessible to both employers and employees. Now, as an employer, what you need to do, so the action that you need to take, is you need to complete your profile and set up a direct debit just to ensure contributions transfer smoothly. Now, you'll log in using your existing ROS certificate details, and there are details on the website on how to complete registration. It should only take 5 minutes to do. I have included a link to the portal on the slide, so if you haven't already downloaded the handouts, make sure to get those downloaded. But if you haven't already set this up, you want to follow that link, get everything in place in good time for January. If you register and complete all of those steps early, it is really just going to help you stay compliant and avoid any penalties as well. So that's what you want to do from an employer side of things. Of course, employees can access the portal as well, and that's where they'll manage their enrolment. And they can access their account using their MyGov ID. And they'll be able to view balances, contributions, investment returns, and update their details or pause payments as well if they want to. So definitely get onto that and get that set up if you haven't already, so you've got it all in place in good time for January. So that brings us to the end of the content for today's webinar. I did want to wrap things up with a quick recap, and I've included this slide so it's there just for your quick reference. It's got all of the key points of auto-enrolment on there, so definitely get the handouts downloaded because this is a good one-stop shop and it's got some great links on there as well. So just to recap, remember auto-enrolment is mandatory for eligible employees, and those are employees aged between 23 and 60, earning above €20,000 gross pay per year, and not currently in a pension scheme. Remember, there is that cap of €80,000 gross pay, and the contribution is calculated on gross and deducted from net. But remember, opt-out and suspension options are available for employees, but those are only in months 7 and 8. So that brings us to the end of today's webinar. Do you want to wrap things up by running through some further support? So as you all know, there is a part 2 of our payroll year-end webinar. And in that session, we'll guide you through setting up the new tax year, creating your payroll calendar, clearing balances, and we will look at what is new for 2026, including how the new pension scheme is going to integrate into your payroll process. So you can sign up for part 2 by using the link in the chat, but there will also be one in the follow-up email we'll send after today's webinar as well. Do you want to shout out the help centre? So sage.ie/help. So we have our support guides on there. We have videos and options to get in touch with our support team if you need to. We also have our payroll year end and auto-enrolment hubs live on the help centre as well. So great time of year for you to check that out. So with all of that said, I am going to jump onto mute and help out with any remaining questions. If you are leaving us at this point, you will see a short survey. If you do have 2 seconds to fill that out, that really would be appreciated. We do love hearing all of your feedback, and we do read all of the comments as well. But I am going to jump on mute to help the guys out with any outstanding questions, and I will see you all shortly to wrap the session up. Hi again, everyone. I really hope you've all enjoyed today's session. I will go ahead and close the session down in the next minute or so. As you exit, you will see a short survey. If you can take a moment to fill that out, your feedback is really valuable to us. We would love to hear what you thought, what worked well, anything that could be improved, so we can keep making these sessions even better for you. You will also receive a follow-up email later today. It'll have a link to today's webinar recording on there and info on how to register for future sessions. But thanks again for joining me and Duncan today. Hopefully we will see you again soon. It is bye for now.